Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. The markets, the precious metals markets, looks like most of them kind of going sideways for the past few weeks, and that's making people get nervous again about the price of gold and silver. One person who is never nervous about market gyrations is Gary Wagner. Hey, Gary, how are you?
I'm excellent today. How about yourself, Kerry?
I'm doing great. I mean, my weather might not be quite as good as yours, but we're getting close now. It's 85 degrees, gorgeous day. Not a cloud in the sky. I was watching people do this surfing I had never seen where they have like a parachute attached. You ever see that? Oh, it was amazing, man. I never encountered that before. It must be relatively new, or I guess they don't do it in New York.
No, they don't.
Yeah, it was pretty cool, though. You could get going fast, and you're like jumping waves. The water was pretty rough, and yeah, it was really a lot of fun. So anyways, I'm trying to get used to the good weather, and I went for a nice walk, got a little tan, I hope, and come back and I see, gold's up. What today is 10, 11, 12. Gold is up around $5 the ounce. Silver closes over 34. What are you making of all these things here, Gary?
I'm glad to see the markets recouping after the kind of pressure we've seen. There's no doubt $35 in silver and $1,800 in gold are marks that are going to be difficult to be taken out. My feeling is they will be taken out, but right now there's formidable resistance in those areas.
Right. And there's a lot of uncertainty in the markets now too, isn't there?
You know what? There's always some uncertainty, but right now there's an abundance of fundamental factors that we have to follow. There's no doubt. But what I find is interesting, and this is one of the reasons I tend to look at the technical indicators to be able to ascertain market direction, is because I get confused, like many investors out there, when I listen to the spin that is put on economic data that comes out or reports that come out. And one of the quandaries that I think we're experiencing right now is the fact that many people, including myself, made an assumption that if the Eurozone crisis would heat up, it would be a tremendously bullish factor for gold. And what we saw, in fact, was safe haven buying of the US dollar as opposed to gold, which of course put pressure on gold. And that was something that we saw over the last couple of 4 to 6 months that we maybe didn't expect. But I will tell you this, I think we're going to go to record highs. I think we're going to well go over 1920 per ounce. And it seems odd after seeing the market come down, but it is a stair step in which the market moves up. It's not going to go straight up. So these types of corrections, I believe, are not only healthy, but needed to kind of let some steam out of the market so it can rest, consolidate, and then move to higher ground.
Yeah, I tend to agree with you there. And 35 has really turned into major resistance point for silver. But what we're also seeing in addition to that is higher lows too, right?
Absolutely correct. And the other thing that is interesting about silver is, I should say if it goes past 35, but my belief is once it goes past 35, it's pretty much clean sailing to 37. And then there's just a little bit of resistance between 37 and 39. I think that when you see this market move, it's going to move up rapidly. The caveat to that is there is a likelihood that if silver does correct and gold corrects, you could see a fairly quick and sizable correction. Look at what happened last time we hit $50 in silver, 1920 in gold. Silver lost 22% in 4 days. Not saying that's going to happen, but you always have to kind of keep one eye and be aware of that.
Yeah, that's for sure. But in the final analysis, the fundamental trend, which I know you track in addition to the technical trends,
absolutely,
short and medium, the fundamental trend is so overwhelmingly bullish that really, unless there's major destruction of too big to fail banks or major deflation of the currency, these metals markets have to go up almost.
I think you're very eloquent in the way that you say it. And the only thing I would add is look for these corrections as opportunities to add to your portfolio rather than becoming flightish and scared. And that's when you liquidate. That's when I think the big money is adding to it. Because if I see silver have any kind of a correction, I want to get in there following those big drops and add to a portfolio. It's the best time to get in.
For sure. And I mean, I kind of finished my buying quite a while ago in terms of the physical, but some of these mining shares are really representing phenomenal values, especially the ones that are getting close to production or are new producers. They're trading as if they never would pull an ounce of gold or silver out of the ground at all.
I, to this day, cannot tell you I've figured out why some of these gold and silver stocks trade the way that they do. You're adding so many new variables in the mining stocks that I believe that we've seen so much underperformance that the pendulum will probably shift to overperformance once the market heats up again.
Yeah. So I guess if there's a lesson to be learned here is, what's going to happen in the long run. Unfortunately, like John Maynard Keynes said, in the long run, we're all dead. But long run, as a confirmation of where your trading is heading, you have to know that you're going to be vindicated. And I've said this a lot of times. I've gotten a lot of email from you out there telling me, you're wrong, they're controlling everything, and I just say, look, I don't know what's going to happen next week. I don't know what's going to happen the week after. When I want to have some insight into it, I'll talk to somebody like you, Gary, and find out what your thinking is on it. But for the long run, nothing is going to dissuade me at this point unless I see 25% interest rates and I see Volcker, rising from the dead like Phoenix.
Right. No, no doubt. I mean, the way that I look at it, and especially when you talk about markets being under undue pressure, whether or not they're manipulated, my sense is this: you get the Bank of Japan going in and being supportive of the yen, for example. All they can do is have an orderly drop or an orderly ascent. They can control how quickly a market goes up or down. But in the long run, the yen goes where it belongs to. I do not think there is the ability by anybody out there to really change a market in the long run. They can have short-term noise. They can have it make a move that is amplified, but it will swing back to where it should be. So my sense is, just as you say, as long as we're looking at a quantitative easing program that's pumping 40 billion plus into the markets each month in terms of buying assets, and then twist on top of that. So it's up to 85 billion potential being spent on a monthly basis. Until that changes, the dollar has nowhere to go ultimately but lower. You've got to be devaluing it. The same thing with the euro dollar. So if you have all of the prominent currencies under pressure because of stimulus and gold simply being a benchmark that stays the same, there can be no other outcome than gold going higher in the long run.
Yeah, and let's not forget that the supply of gold, what's being produced every year, has been declining for years, and now you've got unrest taking place in South Africa. I think you're going to see mining unrest occur in other places as well. You got geopolitical fears of expropriation in certain countries. You tie all this together, and that does not bode well for supply, because mines can take so long to come on stream that the risk appetite in those marginal places isn't there. So we're seeing less than 2% of the world supply, gold supply increase every year. When it's less than 2%, it's increasing less than the world's population growth. And that's something that you have to look at, because population growth in the final analysis will translate into demand for everything. And when you see the gold supply can't keep up with it, or the silver supply for that matter, and then you see what's happened to platinum in South Africa after the labor disorders there, you just know that there's the fundamental bullish case for the metals is the prevailing theme in so many different levels.
There's no doubt. I mean, when we think of it in its most elementary form, they will run out of gold before they run out of paper and ink to print dollars.
Truer words were never spoken. And yeah, there's definitely, even if they gold leaf that ink, they could still go for a lot of years printing it up. And, at some point, I think, and I think you agree, a new monetary system is going to evolve from this dying system. But until that happens, man, it's just going to be a lot of pain, and people should not be betting against the trend in this case, because they will get burned.
There's no doubt the wheels that have been set in motion are going to take some very, very hard work to get out of. And as long as we have a Federal Reserve that's under the belief that you stimulate the economy by printing more money rather than having some sort of a fix to GDP, or something where there is limitations placed upon how much money can be printed in regards to what kind of assets, the underlying assets it's supposed to be representative of, until that has a dynamic shift, we really won't solve the problem. And we've got the fiscal cliff coming up. We've got a tremendous deficit that nobody's really talking about, because everybody wants to talk about the election right now. But we're going to have to do something about that very, very soon. And how is that going to pan out?
Exactly. And, in the election, they're avoiding it like the plague. Other than to say, oh, the debt's too high, I haven't heard anybody come up with a plan and say, all right, we're all going to have to be grown-ups here. It's a bad sandwich, but we're all going to have to take a bite of it. And it's time for everybody to come to the table and admit that what we have been doing is not sustainable, and it's going to hurt you a lot more in the long run if you don't give a little now rather than later. And right now they have to give more than a little, but you've got to make a sacrifice, whether you're a cop on the beat in the Bronx, or you're an administrator in San Bernardino, California. Either way, you're going to be cutting your pension. You're going to be cutting your free lifetime medical benefits. You are going to be pitching in, because the rest of us already have, and it's now your time.
Yeah, well, look at it this way. Take the Eurozone right now and the austerity measures that, for example, Germany's trying to impart on Greece. They didn't think about trying to bring their spending in alignment to their income until outside forces put the pressure on them that they are saying, look, we're just not going to give you any more money. At what point and what outside forces could the United States have as a influence that could possibly do the same thing? And to me, the answer to that is kind of scary, because the only other country that owns any large portion of our debt is China. And what would happen if they came and said something like that? I don't even want to imagine where that would go.
Yeah. Well, we're definitely in these uncertain times, and I have a feeling that once this election mania is behind us, we're going to have to get down to the real problem, the real core. I don't know if as a society we're ready to do it or not, but I think we're getting to the point where we really have no choice in the matter, and we're going to find out soon enough.
Well, you know what? And that's why I love America, because when push comes to shove, we do get things done. And this nonpartisan bickering that's going on and the inability for one part of our Congress to talk to the other part, that has to end. And it will only end if the outcome of not doing anything is worse. And up till now, the outcome of not doing anything has been beneficial. And once that changes, we'll see a dynamic change. We are a resilient, smart group of people that when push comes to shove can do pretty much anything. So I have all the faith that when we have no other alternative, we will be able to resolve the issues that we have. The question I have is, why can't we do it prior to that and avoid all this pain?
Yeah, well, the answer is we never have and we never will. It always has to be a crisis-driven event. And until somehow the system changes, I think that's always going to be the case. Anyway, Gary, we got to get going now. So we find your site at...
Yeah, thegoldforecast.com. And thank you. As always, a real genuine pleasure speaking with you, Kerry.
Hey, you too, Gary. We'll talk to you again soon, and have a feeling things are really going to be heating up.
It's going to be fun. That's how I look at it.
I agree. Definitely fun and definitely interesting. So we'll talk to you soon.
You got it. Have a great day. Bye-bye.